Good morning, everyone. And for those of you who passed the CA Foundation examination in the recently concluded attempt, heartiest congratulations. You have completed one level and now you have moved one level up and now you are in CA Inter. I welcome all of you to the second level of CA preparation, that is CA Intermediate level. My name is Suraj and I am a chartered accountant with All India rank 1, 4 and 2 with over 15 years of experience, 8 years in corporate and 8 years in teaching, and I will be taking care of your first paper, that is Advanced Accounting. So Advanced Accounting, the first paper of CA Intermediate, one of the most important paper, lengthy one, but at the same time it is highly scoring. This is one paper which is not very difficult. See, other papers, like sometimes we find difficulty in audit, sometimes you may find difficulty in law. If you ask me, overall Advanced Accounting, it is an average paper and highly scoring, but it will be pretty lengthy. Okay. Now, what I'll be discussing in today's video is to guide you through what all is covered as a part of Advanced Accounting syllabus, how you should be preparing, what all we have to offer when you take classes with us, how will you prepare and get ready for May 26 or September 26 attempt, and not only that, some of your doubts that you have, some of the myths about Advanced Accounting, all of those things I will be taking care, and I will also take you through one of the most important topics of CA Intermediate Advanced Accounting, that is financial statements of companies. Now, without wasting much of time, those of you who are writing in either May 26 or September 26, the video is for you. And when we talk about Advanced Accounting or when we talk about any subject, the first and the foremost thing we must be aware of is what is covered in that subject. What are we going to learn in that particular subject, or in other words, what is the syllabus of the subject. And the second thing is what will be the examination pattern and how are the questions to be framed in the examination, right? Now, as far as Advanced Accounting is concerned, we can divide the syllabus into broadly two categories. One which covers accounting standards. All of you would have had some kind of introduction of accounting standards at your CA intermediate level or CA foundation level, sorry, right? Accounting standards ranging from AS1 till AS29. Some standards are not there, they have been removed. So this is the set of standards that you will learn. Apart from that, related to these accounting standards, there are some framework and applicability of accounting standards that you will be learning. All right. So this is the first set. The second part of the syllabus is to do with financial statements. Now, when we talk about financial statements, see, all of you have prepared final accounts of sole proprietors, partnership when you learned CA Foundation, right? Now we are moving one level up and we will talk largely about company, and even accounting standards, largely we will be referring it from the point of view of company. All right. So we have financial statements. Now, this financial statements has to be prepared as per something called as Schedule 3 of the Companies Act. So that is one important part of the syllabus. Financial statements is the most important part because you have to prepare financial statements in 4 chapters. One is the financial chapter itself, financial statements chapter itself. Second one is we have something called as amalgamation. Now, don't worry about this, fancy terms and new terminologies which are being introduced. Once you be with me in the entire journey, all of these things will be actually a cakewalk for you. Amalgamation basically means when you have 2 or more than 2 companies joining hands together. Vodafone came up with idea. Okay, that is a amalgamation. Okay, so in amalgamation also you need to prepare balance sheet as per Schedule 3 of the Companies Act. Then we have one chapter which is my favorite chapter, which is called consolidation. Now, in consolidation of accounts also, we have 2 companies. We combine the account of 2 companies and prepare a financial statement. And then we have one chapter called internal reconstruction. This is like renovation. This is like a company which is going through a very tough time. We are reviving that company. There also we need to prepare balance sheet. So in schedule 3, we'll prepare P&L and balance sheet. In amalgamation, consolidation and internal reconstruction, in amalgamation it is balance sheet. In internal reconstruction also it is balance sheet. And in consolidation, we can have balance sheet or P&L, but all of these places we have to follow the format given by the financial statements. Okay. Apart from this, we also have something called as a cash flow statement. Now, cash flow statement is covered under Accounting Standard 3, right? But we'll treat it, separately as a part of financial statements. These are the two broad part of the syllabus. Apart from that, there are some miscellaneous topics like branch accounting. We have something called as buyback of securities. Okay. These are two other smaller topics which are given to us separately, again, which are very, very important, right? This is the broad overview of the syllabus. Now, what we will do, we will have a look at the detailed syllabus and see what all we will be covering. So you can see in the syllabus, we have a 100-mark paper. This 100-mark paper has 30 marks MCQ and no negative marking. Not like mathematics or economics where you had negative marking. No negative marking, 30 marks of MCQ and 70 marks of written paper. 70 marks of written paper, there are 6 questions into 14 which is asked. Question number 1 is compulsory and you have to attempt any 4 in the remaining 2 to 6. So 14 into 5 questions that you have to attempt makes it 70 marks. And the financial statements that I told you, right? So these chapters of the syllabus, consolidated financial statements, company's account, schedule 3, balance sheet, P&L, cash flow. Then amalgamation we talked about, and also there is reconstruction related aspect. These itself account for about 45 to 55 marks. So if I have to tell you, in the entire syllabus that we have discussed, right, the financial statements, the amalgamation, consolidation, internal reconstruction, cash flow, this itself will account for 50 to 60 marks of your paper. Okay, and it has been consistent. And these 50 to 60 marks are actually highly scoring. A lot of students are scared because they don't learn it the right way, right? So here I am to teach you these specific chapters and in fact the entire advanced accounting in the right way, ensuring you are prepared for the examination and also ensuring you are prepared for articleship and CA final, right? Now, if you ask me about my background, I am having All India ranks 1, 4 and 2. So that was during my CA journey. Post which I worked with Bharat Petroleum Corporation Limited for around 4.5 years. Then I worked in another company called Trafigura. This is the world's second largest commodity trading company. Okay, that is my corporate experience. Post which, since 2017, we have started teaching, and my area of teaching is advanced accounting and financial reporting for CA students. Not only this, I have been associated with ICAI to develop study material. I have been associated with ICAI as an examiner. So I know what are the types of mistakes students can make, what are the types of errors students can make, and I can help you overcome those mistakes and errors and prepare better for the examination, right? Now, we have seen the broad structure of the syllabus. So if you look at detailed syllabus, we have syllabus related to formulation of accounting standards. Part of it you have already done it, foundation. Framework for preparation and presentation of financial statement as per accounting standard. So what is the framework by which we will prepare financial statements? And here we are focusing on companies. Then applicability of accounting standards. Which standard is applicable to which entity? Then we have various accounting standards, AS 1, 2, 3, 4, 5, 6 is no longer applicable and 8 is no longer applicable. Like this, we have accounting standards till 29. Okay. Now, what do accounting standards tell us? Accounting standards guide us, they give us principles, they give us policy on how to prepare and present the financial statements. Now, one concern what a lot of students have is, sir, how to remember these numbers? Do we need to remember? Yes, you need to remember the numbers, but it is not difficult to remember the numbers. Okay. Initially, you will feel which standard number belongs to which particular standard, but as and when you start using it on a day-to-day basis, gradually you will be comfortable with all the numbers. Okay, so no need to worry about the numbers. Then we have Schedule 3 to the Companies Act. This is to do with the financial statements and how to prepare P&L, balance sheet and cash flow statement. Then we have buyback of securities, reconstruction and accounting for branches. Okay, this is your overall syllabus, and as I told you, major part of the syllabus is covered. So if I tell you the chapter wise weightage, here you can see 30 to 35% is allocated to company accounts, Schedule 3, preparation of balance sheet, buyback of securities, accounting for reconstruction. Then compulsory question you will get from accounting standard 14, one compulsory question you will get. Compulsory means it is not a mandatory question. One question for sure you will get in the examination, and consolidated financial statements also you will get it in the examination. Okay, this is generally the pattern, and also you get a question from cash flow statement. Okay, now we have a broad overview of the syllabus. You have a broad overview of what I do, how I teach. Okay, over the past 7-8 years, I have taught more than 15,000 students, and the success stories have been really great. And in the journey alongside me, you will also have a definitely a very good learning journey, and you will crack the examination with flying colors. That is my guarantee. Now, what are my expectations from your side? Few things I would like to tell you. First is 100% syllabus completion. This is mandatory. Okay, I want all my students to complete 100% syllabus, and I can tell you with data that wherever the syllabus completion is closer to 100%, chances of success are higher. Okay, so that is one thing. Now you may get a tendency of this chapter is difficult, I will leave this chapter is easy, I will do it later, I will skip a couple of classes, I will do only revision for some classes. Please don't do that. First time preparation, it has to be 100%. Okay, why 100%? Because this is a direct link to your success in the examination. Okay, so first is 100% dedication, 100% syllabus completion. That is what I expect. Second thing is practice or do questions alongside me. This is not a documentary or Netflix series or Amazon Prime series where you'll just watch the lecture and be done with it. You have to do the questions, you have to solve the questions alongside me in the class. Okay, if you start doing that, I will do this later, I've understood the question, I will see the printed solution. If you are in that approach, then it will be very difficult. I have seen students who know the answers, but they are not able to solve it in the examination because they have not practiced. You need to practice each and every question at least once. You have to complete fully. And yes, when you are revising, in fact, my revision videos, I've covered the entire syllabus in 40 hours time. So in that revision video, you can just glance through the important adjustment and then do the solution. Okay, so that is one thing you can do. So second thing is you have to practice. And the third thing is you have to revise. How many revisions? Minimum 2 revisions we have to plan. Sir, but time is not sufficient. See, for September 26 exams, we have a good 10 months time from now. So don't say that time is not sufficient. Okay, earlier we used to have 8 subjects, now we have only 6 subjects. So subject has also come down. So don't say that time is not sufficient. Plan well in advance so that you can complete 2 revisions. So for September students, if you are writing in September 26, target that you will complete the syllabus by June or at the most by July. July is also late. I would say complete the syllabus by June itself, so that you have good time for revision before the September 26 examination. Then we provide mock tests, and you are going to attend the mock test and prepare, understand what are the problems, where all are you, facing difficulties, are you able to complete the syllabus on time. All of those things will be covered alongside the mock test. Okay, so this is the broad approach that I want you to take. Now, what all do we provide alongside the classes? You will get 100% recorded classes. You will get revision sessions. Then all your doubts will be clarified. We have in fact an amazing forum, okay, where more than I think 35,000 questions have been asked by the students and we have responded to them. So you can clarify your doubts on forums. You will get guidance and mentorship over my WhatsApp. You can reach out to me on WhatsApp. You can schedule a call and I'll be available to you. You get access to all the MCQs on our app itself, so you can prepare on the app. Then you get notes where you have the question and answers and also the concept capsule. Okay, so I'll just take you through the notes that we provide. So this is the class solution book you have, right? So you can see some of the testimonials are rank holders in the past. So for each and every question you have a solution. The solutions are simplified keeping in mind the student's requirement, right? It is not a copy paste of ICI material, and wherever required, we have highlighted the important points. I have given important topics to be kept in mind in all the question. So as we solve, I will solve everything in the class. Apart from that, you have an access to the question, question and answer, and you also have access to the theory notes. And this covers all your, everything ranging from your study material questions, study material theory, then past RTPs, important questions from past exam papers, all of that will be provided. Okay. So that is what we have to offer as far as advanced accounting is concerned. So now what we will do, we will start with the overview of preparation of financial statements, and that overview of preparation of financial statements will actually help you understand how to approach this particular subject and how we teach in the class. If anyone has any questions, those of you who are watching, you can feel free to ask. Otherwise, I'll start with an overview of the financial statements of the companies. So let's now start with financial statements of companies. All of you have done final accounts at your 11th, 12th foundation, if you are from direct entry in your book, BCom as well, where you prepare something called as final accounts of sole proprietorship, partnership. For companies, we refer to them as financial statements. Sir, why don't we call it an account and why are we calling it a statement? We are calling it a statement because it is not in the account format. Okay, it is in a statement format. Now, what all do we prepare in final accounts? What all do we cover in final accounts? We prepare something called as manufacturing account. Correct? We prepare something called as manufacturing account. Then we prepare trading account. Then we prepare another account called profit and loss account. Okay. Now, a lot of students have this difficulty in manufacturing, trading and P&L. What is direct expense? What is indirect expense? What we should take to the trading account? What we should take it to the P&L account? If it is wages and salaries, it is a direct expense. If it is salaries and wages, it is indirect expense. All of those things you would have found difficulty at some point of time to recall and remember. Now all this problem will be solved. When we talk about financial statement, entire thing is clubbed together and presented as a single statement of profit and loss. Okay, so no need to worry about which expense to put where. Okay, everything in a single statement called statement of profit and loss. So you prepared these three set. We will now prepare statement of profit and loss. Second, we prepare balance sheet. So for companies also, we will prepare something called as balance sheet. Now, for both P&L and balance sheet, one thing that you have to keep in mind is we have to prepare in a particular format. Okay, it is not like we'll follow whatever format we want in manufacturing, trading, P&L. We have to follow a particular specific format which is given by the Companies Act. So we have something called as Schedule 3 of the Companies Act, which tells us what should be the format of balance sheet and what should be format of P&L. Okay, so these are the two components of financial statements. Apart from this, you are also expected to prepare, or you will learn to prepare, something called as statement of cash flows, or you call it cash flow statement. Okay, you'll prepare statement of cash flows or cash flow statement. What does this tell about? This will be a summary of cash receipt and payment. All of you had prepared cash book, right? The summary of cash book, the summary of receipts and payment in a particular format is given by the statement of cash flow. This we will learn as a part of Accounting Standard 3. Okay, so we have statement of P&L, we have balance sheet, we have statement of cash flows as per Accounting Standard 3. Now one more thing that gets added to this particular, what do you call your statement of cash flows, balance sheet and P&L is something called as notes to financial statements. Now this is something which you have not done in your sole proprietorship or partnership accounting. We have something called as notes to financial statements. So these four put together form part of your financial statements. Alright, these four form part of your financial statements. Now when we talk about Schedule 3 and the Companies Act, there is a very specific requirement that the financial statements of companies, the accounting of the companies have to comply. We have to comply with accounting standards. And as I told you earlier, accounting standards, all the accounting standards 1 to 29 are a part of our syllabus. So they have to comply with accounting standards. Now here I'll give you one extra information. We have some companies, right now just understand this, listed companies and unlisted companies. Okay. To all the listed companies, we apply something called as Indian Accounting Standard. This you will learn in final. Okay. For most of the unlisted companies, we will apply accounting standards, or wherever Ind AS is not applicable, we will apply accounting standards. There are also some unlisted and private companies who are required to follow Ind AS based on certain criteria. No need to worry about them. That is a part of your final syllabus. So here at intermediate, we are only talking about application of accounting standards. So either you will have an unlisted company or you will have a private company to whom only accounting standard is applicable. Okay. So this is the structure of the financial statements that you are required to prepare as per the Schedule 3 of the Companies Act. Now, Financial statements as per section 240 of the Companies Act. Sir, do we need to remember section number, clause number and all of that? No. At accounting or advanced accounting, you don't need to remember. In law or income tax or GST, whatever you can remember that much. Okay. Financial statement includes balance sheet, we discussed, profit and loss account. If the company is a not-for-profit company, then they will prepare income and expenditure account. But we will talk about only P&L account, cash flow statement as per accounting standard 3. Then there is something called as statement of changes in equity. This is not a part of your syllabus. Okay, statement of changes in equity basically means opening equity, shareholder funds, etc. Closing equity, what all changes have happened. Just ignore that for a moment. And explanatory note, which is called as notes to financial statements. If the company is a one-person company, small company or a dormant company, you don't need to prepare cash flow statement. What is one person, what is small company, all of that you will learn in law. Okay, so here we will not break our head in learning something that we anyways are going to learn in law once again. All right. Now, coming to the format of the financial statements, that is the final account, there are two buckets. The first bucket is if the act governing the company prescribes the financial statement format. For example, let us say it's a banking company. Okay, if it is a banking company, the format is prescribed by RBI and RBI's format has to be followed while preparing the financial statement. So let us say we talk about HDFC Bank. Is HDFC Bank registered under Companies Act? Is a company? Yes, it's a company. But HDFC Bank has to prepare the financial statements as required by the Banking Regulations Act. Similarly, if it is an electricity company, they have to follow the acts related to electricity company. If it is an insurance company, you have to follow the act related to insurance company. So, if the act prescribes, a specific act prescribes that this has to be the financial statement format, you will follow that format only. Okay, so insurance company, banking company, electricity company and any other class of company for which a form is prescribed. So this you have to remember for MCQ purpose. Okay, because now we have MCQs also in the exams. So for 2 marks question, 1 mark question, if you get some small things, we should not lose marks there. All right. So for all of these type of companies, we will not apply Schedule 3. Sir, then how do we prepare with respect to specific companies? Okay, with respect to their act, with respect to their format. Sir, are we required to learn how to prepare financial statement of these companies? No. We were unlucky. We had to prepare for insurance also, banking also, electricity also when I was a CA student. Right now it is not required. So we are focusing on what? We are focusing only on Schedule 3 for all other companies. Now in Schedule 3 also, there are different formats for companies required to follow AS and Ind AS. What are we supposed to do? We are supposed to follow the accounting standards wala part, which is balance sheet as per part 1 and statement and P&L as per part 2 of the division 1 of the Companies Act. Okay, so division 1 of, not Companies Act, division 1 of Schedule 3 of the Companies Act, that gives us the format for P&L and balance sheet. Now what we will do, we will have a look at the format of balance sheet and we'll have a look at the format of P&L. Okay. Now please remember, for each of these items, there are specific disclosure requirements. Where do we disclose? We disclose in a place called notes to financial statements. There are specific disclosure requirements. Some disclosure requirements are directly related to the questions we'll solve in the class. Some disclosure requirements are more for your remembering for MCQ purpose. So initially we will not focus too much on the various disclosures in detail. First we will see how to prepare the balance sheet, what should be our approach to prepare the P&L. Then we will move to the disclosures part. Okay. Now when we look at the balance sheet, the name of the company, balance sheet as at a particular date, the date, this you already know. We need to give previous year and current year figures. Previous year figures are generally not asked in the exam, so we will focus only on current year. Okay. Now, how is this balance sheet prepared? If you look at any balance sheet, that you have been preparing, the balance sheet has in T-shape format assets, capital and liability, right? Then asset, you have non-current asset, then you have current asset, right? In capital you have share capital, or just say capital for now. You have liabilities and all of this will convert this into a statement format. Okay, so instead of preparing a balance sheet with asset and liabilities on one side, asset on one side and liabilities on the other side, we'll have equity and liabilities as first part, then we'll have total of equity and liabilities, and we have assets on the other part. Okay, now I will run you through this format and tell you which all accounting standards you need to learn subsequently so that you have clarity on each of these aspects. In equity and liabilities, the first item is shareholders fund. Like what we have capital, right? This is nothing but like your capital account. What all we need to pay to the shareholders is shown under shareholders fund. Sir, what all is shown under shareholder fund? You show share capital. Share capital is what are the components of share capital: equity share capital, preference share capital, how much is issued, how much is paid up, all of that we have to show. But be very careful. Here you will not give any breakup. Here in the share capital you will have only one number. If you need to provide breakup of the share capital, what we will do? We will show it in note number 1. And please remember, in the examination you have marks for preparing the notes to accounts as well. Okay, so share capital is the first item. Then we have something called as reserves and surplus. Sir, what is this reserves and surplus? This reserves and surplus basically talks about the P&L balance, then any other reserves which belong to the shareholders. Sir, what are those reserves? That we will understand one by one. Okay, right now if I dump all the information onto you, you will run away. I don't want to that. So first item is share capital, second item is reserves and surplus. The third item is money received against share warrants. So if we have received something against share warrant, that is disclosed here. Now sir, what is a share warrant? Share warrant is basically a document which entitles the holder to buy the shares of the company. So if you have share warrant of Reliance, you can use that, go to Reliance and give that share warrant, give some money along with it, and you can buy the shares. That is what is called share warrant. So if any money has been received against share warrants, that is shown under money received against share warrants. Then the second item is share application money pending allotment. So all of you have learned company's account, issue of shares, allotment of shares, one of the most scariest chapter at that point of time. Now you don't need to worry about all of those entries, but if there are any share application where allotment is pending, that is also shown as the second item. Okay. After that we show non-current liabilities and current liabilities. So first, shareholders fund, and please remember, you will have to note this format down, keep on revising so that you will remember. So first item is shareholder funds. Under shareholder funds, what do we have? Share capital, reserves and surplus, money received against share warrant. After that, what do we show? We show share application money pending allotment. After that, what do we show? First, we will show non-current liabilities, then we will show current liabilities. Now, under non-current liabilities, we have long-term borrowings, deferred tax liabilities. This is a new item for you. Other long-term liabilities and long-term provision. Under current liabilities, short-term borrowings, trade payable, other current liabilities, short-term provision. So see, very related, right? Here you have one extra item, deferred tax liability. Here you have one item, trade payable. So this trade payable is nothing but our sundry creditors. Okay. How to classify between current and non-current? That also we need to understand. All right. Now, whenever we talk about deferred tax liabilities, This is covered under Accounting Standard 22. So when we learn Accounting Standard 22, we will learn about deferred tax liability. Then you have this, no, provisions, okay, other liabilities. For all of this, we have one standard called Accounting Standard 29. So in Accounting Standard 29, we'll learn about the long-term provisions and short-term provisions, the liabilities part, when do we recognize, how do we recognize, all of those things. So AS 22 and AS 29 gets covered here, right? Then we have on the asset side, first non-current asset, then current asset. Under non-current asset, first is property, plant and equipment and intangible assets. All of you have learned about, fixed assets, property, plant and equipment and intangible asset. So that will be coming up here. Property, plant and equipment we will learn in Accounting Standard 10. See, for most of the items we have a respective accounting standard. Then intangible assets we will learn in Accounting Standard 26. So when you are learning a standard, you should know what is the implication of that standard in the financial statements. After that, we have work in progress, capital work in progress and intangible assets under development. Capital work in progress is related to PPE, intangible asset is related to intangible asset. Sir, what is capital work in progress? If we are, let us say, constructing a plant and the plant is not yet fully constructed, we show it under capital work in progress. Then we have non-current investment. Investment is where you invest some money to get returns. For investment, we have a standard called Accounting Standard 13. So it could be a long-term investment, we classify it as non-current investment. It could be a short-term investment, which we classify it as current investment. Then deferred tax asset. We saw deferred tax liability up. Now what is the standard number for deferred tax asset? AS 22. See, by the time you write 3-4 times, you will yourself remember that this standard number belongs to this particular topic. Then long-term loans and advances, like let's say we have given advances to employees or any other party on a long-term basis, that you will disclose here, and any other non-current asset. Any other non-current asset or here any other current liabilities means if it is not covered in B, C, D and A, here you will disclose that. Okay. Then comes current assets, current investment, we'll learn in Accounting Standard 13. Then we show inventories, the stock, closing stock, covered under AS2. Then we have trade receivables. There is no specific standard dealing with trade receivables. So your sundry debtors, okay, that is shown under trade receivables. Cash and cash equivalents, how much of cash you have in hand and in bank, that is shown here. Short-term loans and advances and other current assets, all of these are shown here. Okay. Now, related to property, plant and equipment, we also have Accounting Standard 12, which deals with government grants. We also refer to Accounting Standard 16 that deals with borrowing cost. Okay, so whenever we prepare a balance sheet, we should know which standard is impacting the items being disclosed in the balance sheet. Then we have one very dangerous standard, Accounting Standard 19. So scary standard. This deals with leases, and this is also related to disclosure under property, plant and equipment and intangible assets. So leases also has an impact on the disclosures of PPE. Okay, so 12, 16, 19, all of these things we need to be aware of. Now, for each item that appears in the balance sheet, there is a long list of disclosure requirements. Sir, what is the meaning of disclosure? Say for example, the best way to understand, we have property, plant and equipment. In the balance sheet, we will give only one item called property, plant and equipment. Correct? Now, in that property, plant and equipment, we may have land, we may have buildings, machinery, furniture, air conditioning system, so many things. So what the standards and even what the Schedule 3 requires is, on the face of the balance sheet, this is called face of the balance sheet. On the face of the balance sheet, disclose only one item, that is property, plant and equipment. the breakup of it, how much depreciation has been charged, if you have given it as a security for loan, let us say the company has given land and building as security for loan. All of those things you have to disclose after the balance sheet and P&L and cash flow in the section called as notes to financial statements. Okay, so all those things have to be disclosed. Then in property, plant and equipment, while calculating depreciation, what are the various methods? The two standard methods that you follow, SLM and WDV, correct? Now in that SLM and WDV method, which method have you followed? That also we have to disclose. So everything forms part of the disclosures in the financial statements. So there is a long list of disclosure. Okay, there is a long list of disclosure. Don't worry, we will not touch it now. First, we'll get comfortable in preparing the financial statements and we'll look at some small disclosures initially. Subsequently, we'll run through the entire disclosure list. Now, the disclosure requirements are of two categories. One, relevant to the preparation of financial statement in your exams. Second, for let us say MCQ purpose or your general understanding. So don't worry that how will we remember so much. No need to remember so much. If you are able to solve all the questions with some basic disclosures, more than sufficient. Okay, and say, yeah, even if you forget one or two disclosures, you will lose 1 or 2 marks. It's not that you will lose 14 out of 14 marks in the examination, right? So don't put a pressure on yourself to remember all of these disclosures, right? Now balance sheet is done. Now we'll have a look at the statement of P&L. See, such a long disclosure requirement. Don't get heart attack, okay? I'm telling you, by the time we solve enough questions, right? 90% of disclosure for examinations, you will be able to remember. No need to worry about that. All right. Now we'll move to Now we'll move to the form of statement of profit and loss. As I told you, earlier you were preparing manufacturing account, then trading account, then P&L account. All three combined, you'll prepare a single statement called statement of profit and loss, right? Again, it has to be in the specific format only, okay? Now in the P&L, you will start with the first item, which is called revenue from operations. Revenue from operations, basically in layman terms, if I have to tell you, what you used to call sales, that number you will put here as revenue from operations. Okay, so earlier you used to say by sales, right? That you will say this is my revenue from operation. Sir, what is the meaning of operation? Operation means something which is the core of the company. What does the company do on a day-to-day basis is a part of its operations. Right? So say for example, IndigoLearn, what is our operation? To provide classes. Okay. Same thing, let us say if you go to a computer shop, what is the operation? Buying and selling computers. If you go to let us say Tata Motors or Maruti Suzuki, what is their operation? Manufacture vehicles and sell the vehicles, right? So that is what is called revenue from operations. So the core activity of sale of products, sale of services is shown under revenue from operations. What is the main activity? That goes into here. This is covered in Accounting Standard 9. So you have a separate standard called Accounting Standard 9 that deals with revenue from revenue. So from operations or from other activities, it is covered under AS 9. Sir, then what is this other income? Other income is the income which is not directly related or which is not from my operations. Like when you prepare your P&L, earlier when you used to prepare, you would have, let us say, something called as interest income. Now this interest income is not a revenue from operation. Interest income is my other income. If it is a bank or if it is a financing company, for them interest income is revenue from operation. But for normal company, let's say IndigoLearn, okay, so if you have put some amount in fixed deposit and we have earned interest on that, is that my revenue from operation? That is not my revenue from operation. That is my other income. Okay. So, two items of income, revenue from operations and other income. In your trading account, if you see, you used to have something called as buy sales and buy closing stock, to opening stock, to purchases, to direct expenses, right? This part of sales is being captured in revenue, and when you prepared P&L, you had, let us say, by interest. This part is being captured under other income. Okay, so see, you need to know logically how each item is moving from our trading P&L account to the statement of P&L. All right, then after income, after we find the total income, we take something called as expenses. What do we take? Expenses. We do not have this of direct expense, indirect expense, nothing. You need to know these heads of expenses. That's all. You need to know these head of expenses. Each item of expense should be classified in one of these two heads. Okay, one of these 8 heads, right? First item you see, cost of material consumed. Now, sir, what is the meaning of cost of material consumed? How do we compute that? Now, go back to your manufacturing account. In your manufacturing account, you had something called as to opening stock of raw material. You had something called as to purchases, and you had something called as buy closing stock of raw material. These are the items you used to post. Okay, of course, you have direct expenses and all. That direct expenses is a part of respective expenses. So this opening stock of raw material, if I add purchases to that, and if I take the closing stock of raw material, so basically opening stock plus purchases minus closing stock, the net amount that I get is posted as cost of materials consumed. So how do we get this? Opening stock of raw material plus purchases of raw material minus closing stock of raw material will give me raw materials consumed or cost of raw materials consumed. This is applicable in case of manufacturing companies. For trading companies or for companies involved in, let us say, providing services, you may not have the cost of materials consumed. Okay. So here what we are taking? We are taking basically opening stock plus purchases minus closing stock of material. Now in the examination, they may give you directly or they may give you different components and you have to do the computation. Okay. Second, purchases of stock in trade. Sir, what is the difference between material and stock in trade? Stock in trade is something like I buy and I sell. I buy, let us say, computer, I sell computer. I buy a car, I sell a car. I am DMart, I buy various FMCG goods, I sell those goods. So something which I have purchased for the purpose of selling is called stock in trade. So that purchases I show separately. Okay. Now where do we show that purchases? Here in our trading account. This purchases number is there, right? 2 purchases what we used to write. That part will be shown under purchases of stock in trade. Now see, for raw material what are we doing? We are calculating raw material consumed. Whereas for purchases we are calculating, for stock in trade we are calculating purchases of stock in trade. Alright, that is the second thing. Then we have changes in inventories of finished goods, work in progress and stock in trade. Now what is this changes in inventory? Again come back to your trading account. In trading account you have opening stock here and closing stock here, right? So basically one is on the debit side and one is on the credit side. If let us say debit side is 1000, closing stock is 500, what is the net impact on the trading account? You will say, sir, net impact is 500 in the expense side. So here what you will do, you will take the difference, opening stock minus closing stock, simply opening stock minus closing stock, and show it under expenses. Now here one thing you have to keep in mind is, if instead of 500, if this was 1200, then opening stock is 1000, closing stock is 1200, means what? On the credit side 200 is more. So here you will post it as minus 200, or in brackets you will post it as 200 as reduction of expenses. I hope it is clear. So here one thing you have to keep in mind, for changes in inventories, you will take opening stock minus closing stock. First thing. Second, if opening stock minus closing stock is negative, you will write the number in the bracket or as a reduction in expense. This is one silly mistake which I have seen a lot of students doing. They will simply take 200 and add it to the expenses. Don't do that. If opening stock is more, then it is an expense item. If closing stock is more, it is a reduction of expenses. Okay. Sir, then, but why are we doing these changes in inventories? The reason we are doing is purchases have been taken directly as a single item. Okay. Opening stock and closing stock is left out. Now, if you see, cost of goods sold, whatever we have sold is what is our opening stock plus whatever we have purchased of finished goods minus whatever is the closing stock. If my opening stock was, let us say, 100, I have purchased goods of 1000 and my closing stock is 80. How much of goods have I sold? You will say 100 you had, 1000 you purchased, 1100 minus 80, 1020 is the cost of goods sold. Cost of goods sold comprises of purchases and opening stock minus closing stock. So here what we are doing, purchases and changes in inventory, basically this gives us cost of goods sold. Okay, for a trading company. For a trading company, what is the cost of goods sold? Okay, that is what is given by these two items. So what do? We'll compute cost of material consumed, put it separately. We'll take purchases of stock in trade, put it separately, and changes in inventories, we put it separately. Where do this number come from? In trading account, we used to show purchases, show separately, opening stock minus closing stock, show it separately. Alright, then after that, there is also something called as changes in WIP and stock in trade. Stock in trade is like finished goods. And WIP changes is if something was in work in progress at the beginning and if something is in work in progress at the end, what is the difference of that? This we used to put in manufacturing account earlier in sole proprietorship. Here we will show that in the P&L itself. So come on, what do we have in P&L? Revenue from operations, other income. These are the two items of income. Then we have items of expenses. What is the first item of expense? Raw material or material consumed. Second, purchases of stock in trade, that is finished goods. Third, changes in finished goods or work in progress or your stock in trade. Fourth, employee benefit expense. Now the thing here is your wages, your salaries, direct, indirect, everything will go under employee benefit expenses. This will be covered in Accounting Standard 15 as well. Two standards where students face difficulties, AS 15 and AS 19. So when we do AS 15, please pay extra attention. Okay. So all your salaries, expense, bonus paid, provident fund, gratuity, anything, all of that comes in employee benefit expenses. Then we have a separate line item called finance cost. So what is this finance cost? Basically, if let us say you have interest expense, that will be presented in finance cost. Interest on overdraft, interest on loan, all of that will be presented here. And this will be covered in Accounting Standard 16. See, each item of P&L, there is one or the other relation with accounting standard. Sir, what about this inventory? For inventory, we have Accounting Standard 2. We have Accounting Standard 2. Okay. Then depreciation and amortization expense, Accounting Standard 10 and Accounting Standard 26. You are aware, right? Depreciation and amortization for intangible assets. All other expenses are put in the last one, residual column. Okay. So if anything doesn't fit in, material consumed, stock in trade, employee benefit expense, finance expense, depreciation expense, rest residual factor will be kept under other expenses. All of that you'll put in other expenses. Your electricity, your printing, stationery, anything, any other expense other than the expenses that we have discussed above will be shown in what? In your other expenses. Now please remember, for each of these again we need to provide notes and breakup. For example, other expenses. If you just say other expenses 100, that is not sufficient. What is the breakup of other expenses? We have to disclose. Right? Now, the total income minus total expenses will give something called as profit before exceptional and extraordinary items and taxes. So whatever income we have taken and whatever expenses we have taken, income minus expense is profit. In that profit, have we covered taxes? No. So taxes will deal separately. Then the schedule 3 and also accounting standards require us to disclose something called as exceptional and extraordinary items separately. So what is this exceptional or extraordinary items? I'll just give you one example. Let us say there is a fire. Because of the fire, there is a huge damage to inventory and plant and all of that. Now, is it a normal item? No. Should we disclose that separately? Yes, because that is not a normal item. That can have a significant impact on the company. So that item we have to disclose separately. So those are exceptional and extraordinary items. Now, where we will learn this? We will learn this in Accounting Standard 5. Items exceptional means it is not happening regularly. Extraordinary, it is not in my ordinary course of business. So in that case, those items have to be shown separately. Okay, it could be a loss due to fire, or let us say it is a loss due to we lost a very significant court case. All of those items we have to disclose there. So after profit before exceptional and extraordinary items, we disclose exceptional items. So what has happened? From this, exceptional item is disclosed. So now we have profit before extraordinary items and tax. Then we disclose extraordinary items. Then we have profit before tax. Typically in the examination, you will not have these items. Okay, one or two case it may be, but otherwise they generally don't ask exceptional and extraordinary items in statement of P&L. If they ask, you can just present it. Sir, what if these items are not there? Then you can, from total expenses, you can directly jump to profit before taxes. Then we have to pay taxes. Government will not leave us. Whenever we have profit, we have to pay taxes. These taxes are classified as current and deferred tax, which we will learn in Accounting Standard 22. Once we learn it in Accounting Standard 22, you will see how to calculate the taxes. After you reduce the tax, we get something called as profit for the period from continuing operation. Sir, what is this extra item every time? We thought after profit before tax, if you reduce taxes, you'll get profit after tax. Yes, this is profit after tax only, but from continuing operations. Sir, what is this continuing operation? Let us say currently we are providing CA classes, and we also provide, let us say, CFA classes. Okay, we provide 2 classes. We somehow decided to discontinue CFA classes, means we will not provide these classes from next year onwards, or from current year onwards. From a particular date, we will not provide these classes. We will continue with CA classes. So continuing something that I have to present separately. Profit or loss from discontinuing operation means if I am shutting down one significant part of the business, the profit of that, the tax expense of that, disclosures of that have to be separate. And continuing operations, I have to provide separate disclosures. So why? Because the investor should know if this person or if this company has shut down a particular business, then what is the impact on the overall P&L? That is why discontinuing operations we disclose separately. So it could be a case, let us say Citibank. Citibank was operating in India. They are also operating in rest of the world. Citibank exited India business. When they exited India business, that is called discontinuing operation. So that discontinuing operation, what is the profit of the discontinuing operation? What is the tax related to the discontinuing operation? That has to be presented separately, and this is covered under AS 24. So here we have continuing operation. For now, you bother only about this. This we will learn in AS 24, which will give us the net profit or loss from discontinuing operation. So this minus this, profit or loss from discontinuing operation. Then combination of continuing and discontinuing operation will give us the profit or loss for the period. Now please remember, if nothing is mentioned, if they just say profit, it is assumed to be profit after tax. Okay, and after that we have to present something called as earnings per share, which is covered under Accounting Standard 20. Right? AS 20 talks about earnings per share. That disclosures has to be done as per AS 20. So So as far as this particular chapter is concerned, preparation of financial statement, you will have to remember both the format. What is the, so P&L, revenue from operation, you will take other income, you get the total income. Then under expenses, material consumed, purchases of stock in trade, changes in inventory, employee benefit expenses, finance cost, depreciation and other expenses. Then that gives us total expenses. Typically in the examination, you will have total income and total expenses. You will directly go into profit before tax. If however there are exceptional and extraordinary items, you have to give the bifurcation. First exceptional, then extraordinary. Exceptional, extraordinary. Then profit before tax, from that you will reduce the tax expense and typically you will reach profit after tax. However, if there are discontinuing operation, you will give the disclosures of continuing operations and discontinuing operations separately. And you also need to compute the earnings per share. Okay, so this is the format of profit and loss statement. So we have seen format of balance sheet and format of profit and loss statement. Okay. So we stop our class here for today and we'll continue with the how to prepare the balance sheet and P&L from a given trial balance and what are the things to be taken care of, how to tally the balance sheet. All of those things we'll discuss in the next class.